Okay, I am Belinda Whitfield, and listen, I want to thank you so much for joining the webinar. I am so excited to be sharing with you my inside tips on what we're going to be doing within our organization for our clients. So the first thing you need to know is basically we've got these big deadlines coming ahead. For January 31st, 1099s need to be mailed out to the Internal Revenue Service. Also, the W-2s need to be sent out to the Social Security Administration. Your fourth quarter 941s need to go out, and also you're going to need to hand deliver your 1099s and W-2s to your recipients by the particular deadline. So the key thing that I want to basically this is going to set our agenda. We're going to focus on what we need to get done in order to meet this particular deadline for the Internal Revenue Service. So for starters, I'm going to go ahead and take a deep dive and just kind of go over the key topics on what we're going to be covering. One, reporting contributions. Now, if you noticed in the previous slide, we didn't have any specific deadlines for that. That wasn't noticed. So we're going to be talking a little bit about that as well as whether there's a real deadline for that. And then also, we're going to be going over the 1099 reporting requirements. We're also going to hit on independent contractor versus employees, as well as payroll reporting. Okay. And so with regard to your reporting contributions, we're going to take a deep dive on that. The first thing I want to focus on is this due date. Is there really a due date for reporting 1099 contributions? And no, there is not. There's not a specific IRS deadline, but they are due when the donor requests those donations. Okay. So you don't have a deadline, but when a donor requests it, then you want to be sure to have that contribution statement ready for them. Now, you do want to make a good business practice. It's a good business practice to go ahead and send them out annually, to have them ready to mail out, because a lot of people are going to be preparing their tax returns starting in February or March. So you want to be prepared to go ahead and send out those contribution statements sometime in January. Now, it's okay if you mail your donations or hand deliver your donations, hand deliver the statements, or even make them available online. That's fine too. Okay. So the key thing is you want to just have a good business practice of making that information available when the donor requests it. Now, the key thing with regard to the contribution statements is that the IRS requires donors to have a specific written statement whenever there's a single donation of $250 or more. What's important is that you provide a letter or a statement to the individual acknowledging that that you have received a contribution of a single contribution of $250 or more. So technically, from an IRS standpoint, if their donations if the individual donations are all under $250, you don't necessarily have to send a statement. It's just a good business practice to do so. So here are some things that need to be on that statement. I see I missed one key bullet point here. The name and address of the organization needs to be on there. The name and address of the donor should be on there. Actually, the donor's name should be on there. You need the address if you're going to actually mail it out. Also, you want to make sure that you have, now this is key, the date and the amount of the donation. Okay. Want to be specific, the actual date, not the month and not the week, but the actual date of the donation needs to be listed on that particular contribution. Okay. The next thing is that you want to make sure that your statement indicates that you want to have a footer or something somewhere on the statement that indicates that no goods or services were provided in exchange for the monies received. Okay, so the next thing you want to do with regard to the contributions is you want to watch out for any donations that are sent in the mail, because if those contributions are postmarked by December 31st, they need to be on that contribution statement. Okay. So you want to be, if your organization is in the habit of receiving contributions in the mail, you want to watch that and make sure that it's part of the current year's contributions. Okay, then when it comes to smaller organizations, you may not necessarily generate, these large contribution statements similar to churches, but ideally what you want to do is at least send out a thank you letter whenever you receive a single donation from an individual. That's a really good business practice to put in place, is to report those the contributions that you receive from individuals, because I'll tell you, when you send out the statements, that encourages them to want, or send out a thank you letter, that could possibly encourage them to want to make another donation. If your organization receives contributions on a recurring basis from specific individuals, maybe you have a partnership program, then that's where you may want to look at sending an annual statement to those individuals. Now, one key thing, a growth tip that you want to put in place on that particular note with regard to the recurring donations is to put some processes in place to encourage recurring donations or recurring contributions from individuals. Okay. You want to really make it easy for donors to give to your organization. If you have a website and all you list is your organization's address, and what the donor has to do is, if they want to contribute to your organization, they have to write a check, get an envelope, address it, put a stamp on it, drop it in the mail. That's a big inconvenience, in my opinion. So you want to try to make it as easy as possible and put some processes in place where you can start receiving online contributions, whether it's an ACH draft, that's money just coming out of their bank account, or either a credit card or accepting debit card donations. Now, if your organization is larger, you want to make sure that you have some type of donor management database. This is a database where you will record all of the individual contributions, and at the end of the year, you're able to just, click a few buttons and generate your contribution statement. The key thing is that you want to be careful to choose the correct format for those contributions. You want to be careful to add a footer for those contributions, and that's if your donor management system doesn't necessarily have that footer that references the no goods or services were provided in exchange for the donations. Please excuse any noise you hear in the background. My printer is running. I got some assistance generating some documents. The next thing you want to be careful to do if you're using a donor management database program is that you want to check your system, or check your cash transactions just to see, or bank account transactions just to see if any donations were returned. Okay. Because if those donations were returned, you need to go back through your database and deduct those contributions. Now, ideally, when it comes to posting the adjustments for those, I actually prefer that you not remove the transaction, but you keep the original transaction in your system as a record that you did in fact receive that payment, but post an additional transaction to show it being reversed out, and include some type of comment that indicates that that payment was in fact returned. Okay. And then so once you're, again, when you're working with a donor database, you can go ahead and, print a test document to make sure it's going to come out in the right format that you want, and then go ahead and print all of the statements and distribute them. Now, this is a sample contribution statement. All right. And so this has the key components that I talked about. One, the name of the organization, the name and address of the organization, the name of the individual. And if you have the address, that's great. But see here on this one, we're listing the contributions by date and amount. And this donor database goes a step further and records the contributions by check number, as well as, whether any of those contributions were cash. And then there's like a summary that shows how they classified it in different funds. But then this key thing here is that we have that IRS statement at the very bottom that indicates no goods or services were provided in exchange for the monies received. Okay. So if you don't, what do you do if you don't have a donor database? If you're receiving a lot of contributions, but you don't have this database, well, hopefully you have some type of record of the contributions that you've been receiving, whether it's in the form of Excel or some handwritten documents. You're going to need to review your records. And ideally, what you'll want to do is just go back and find the transactions that are $250 or more, because if you recall, I said from an IRS standpoint, we only need to list that date and amount for the contributions that are that are $250 or more. So you can still go ahead and prepare that statement where in the past where you may have been listing, providing a statement that provides the total that a donor gave. You can go ahead and do that. The key thing is that you want to go ahead and add a supporting document that lists each of the transactions that are $250 or more, and go ahead and include the date and the amount of those transactions. And so you still want to also have the wording that there were no goods or services provided in exchange for the monies received. Okay, so that's it in a nutshell with regard to the cash donations. Now, the next thing is that sometime during the year, you may have received in-kind donations. Now, these are donations of things like furniture or equipment or computers or vehicles. Now, when it comes to these type of things, you'll want to provide a letter to the donor. You'll want to list the name and address of your organization, as well as you'll want to list the name and address of your organization, as well as the description of the item, and indicate whether no goods or services were provided. Okay. Now, the key thing is you do not want to indicate a value for the items. I see we have a couple of questions here. One, yes, I will distribute the slide deck of the PowerPoints to you after the session, and more specifically with regard to these donations. Let's see, is that $200? Let's see, Eileen noted, is that $250 or more per transaction for members? Yes, it is exactly $250 per transaction, not total. Okay, a single transaction. All right. Okay, so with regard to the in-kind donations, if you receive any larger donated items, now, and by this I mean items where the value of that item is over $5,000, or if the donor perceives that the value of that item is over $5,000, then you will want to, the donor may request that you give them a Form 8283, because their tax preparer is going to want that. And so this is a form where the donor has to complete the form. It's a 2-page form, and the organization needs to actually sign the form. So here is the 2-page sample form. Okay. And you see, I highlighted in red where there is the section that you're going to sign. So actually, I'm going to zoom in on that portion. And so here is where you are. You're actually going to, the organization, someone, an officer from the organization or authorized person should sign this particular statement. But there's one key thing I want to point out that I highlighted in yellow. Okay. It says, if furthermore, the organization affirms that in the event it sells, exchanges, or otherwise disposes of the property, that's whatever that's described in that section or that form within 3 years of the date of receipt, then the organization is going to file a 80 Form 82. Okay, we're going to talk about that in a second. So you're basically acknowledging that you're going to keep this form. You're going to keep track of that item that you received and just kind of monitor 3 years later. Did you sell that item? Did you dispose of it? And if you did, then your organization is going to have to complete an 82 form. And so now that's another 2-page form. It's a little bit shorter. But the key thing I want to point out is that there's a certain section of that form that the IRS is going to be looking at. And I highlighted this in red. The IRS is going to be looking at the amount that you received upon disposition. And so here's the thing. Here's the scenario. Let's say, for example, somebody makes a donation of a truck. And they claim the value of the item is about $10,000, and they claim this tax deduction on their tax return for $10,000. Now, the key thing I want to point out is when you sign that Form 8283, acknowledging receipt of it, you are not attesting to the value. It's up to the individual to get it appraised and determine what they can claim as a tax deduction. You're just acknowledging the receipt of it, and you're acknowledging that if you sell it within 3 years, you're going to, or dispose of it within 3 years, you're going to notify the IRS. So let's say this person claims a $10,000 tax deduction for that item. And then you get it. You realize, hey, this is really a piece of junk. We're just going to sell it to a junkyard and, get $100 for it. So that's where you're going to send the statement and acknowledge that, yeah, we disposed of it and all we got was $100 for it. So you're going to send a copy to the IRS as well as a copy to the individual. And unfortunately, that's going to raise a red flag with the IRS because that individual could very well have taken a substantial tax deduction for something that really had a much lesser value. So the IRS will be testing that out. Okay. Let's see. We have a couple of questions before I move on to the next one. What if you, let's see, this is from Lisa. What if you placed a value on items donated? Now, you do within your books, your accounting system, you are going to need to put a value on items donated. You are going to have to record that on your accounting system. But when it comes to you sending out a letter to the individual, you should not put a value on it. Okay. And don't allow the individual to push you into putting a value on it. All right. So but if you've already done it, if you've already sent out the letter, it's too late. It's done. It's a done deal. The key thing is going forward, you want to change your business practices. The next question comes from Javita. How can we report a donation of gas purchased for the vehicle, donated, or the insurance paid by the donor? How do we report this as a monthly donation? Now, here's what I would suggest that that the donor do in order to keep this a nice, clean transaction. Allow the donor to write a check directly to the organization for what they estimate the insurance costs and the gas costs to be. Okay. And then let the organization pay the bill. Now that makes it a very clean transaction. So now the donor is only taking a tax deduction for the payments that they wrote directly to the organization, just like any other donor would do. Now, if the donor has been making these payments in the past, and what you could do is have the donor Now we're assuming, first of all, that this is a vehicle that was donated. So now the title of the vehicle is in the church's name. And so the owner is covering the cost for the gas and covering the cost for the insurance, is what I understand. Correct, Javita? Okay. And so if that's the case, then what you want the donor to do is put together a list of the expenses that they paid. They don't necessarily have to provide you with the receipt, but if they can just kind of itemize, on this day I paid this, on this day I paid that, for insurance and for gas. If they can itemize that, then you can give them a letter that acknowledges that the donor paid these expenses and that they are reasonable and necessary business expenses incurred on behalf of the organization. And so now the donor can take that and still claim it on their tax return as a charitable contribution, but it was for direct expenses that were paid for the organization. That's how you can handle that. So let's see. You noted, Javita. Yes, ma'am. Okay, it's in a bank statement. Yes. Now your bank statement, good. That leaves a good paper trail. So I take it that the bank account is, you noted a bank statement. So is that a bank account that is owned by the organization, or the individual has their own bank account with all of the transactions? How's that working out? Okay, I'll give you a minute to respond to me. And while I'm waiting for you, I'm going to look at Apostle Milton's question. Let's see. Do we as a church have to give out IRS donation letters to members if their transaction is less than $250? For example, many of our members report their tithes, but their biweekly amount is under $250. I stated earlier, if the amount is under $250, no, you do not need to do that. But I'll just kind of go back to my previous slide here, okay? Because I want you to see this. You might have missed this here. One, if the donor requests a contribution statement, then yes, you should give them contribution statement. If those donations are not $250 or more, then you don't have to itemize them. You can just group them all together. But ideally, it's a good business practice. It's a good business practice to go ahead and give them their statements so that they don't have to ask. Okay. And plus that shows the member that you've got some good tight systems in place when you are keeping records and giving them their statements in a timely basis. Okay. Let's see. We're going to go to the, get to the next question. How do you report meeting space? I'm going to need you to give me a little bit more information on that. I'm guessing that what you mean is, what if someone is donating free space to your organization? If that's the case, then you can give them an acknowledgement, thanks for the donated space, but technically they can't claim a tax deduction for the free use of space. And on that note, Holy Spirit is telling me there's another thing that they cannot claim, people cannot claim a tax deduction is for their donated time. Okay, so one, I want to just kind of backtrack on that free use of space. If it's a landlord that is, let's say they have a facility that they could have been collecting $1,000 a month for, but they're allowing you to use it. Well, when it comes time for them to file their tax return, they're only going to report and pay taxes on the amount that they collected for rent. All right. So if they didn't collect any money from you for rent, they're not paying taxes on it. Now let's look at another way. What if they had collected the $1,000 a month from you for rent, and then they turned around and gave it to you as a check, as a donation? All right. And what if it was just simple transaction like that? Well, one, they would be reporting more rent income but then they'd be taking it out as a tax deduction. So it'll be in and out as a wash. So really it won't have the net effect will be zero. And the net effect is that they're only paying taxes on the money that they truly collected as rent from their other tenants. Okay, so free use of space, there's no tax deduction for that. Okay, let's see. The next question is there a way to claim monies that came out of pocket for the organization due to the beginning of building your organization? Yes, you can. And I do encourage my clients to do that. When you are, those are the startup costs for setting up a 501c3 organization. Yes, keep track of those costs. And yes, you can claim that as an expense, the expenses that you paid on behalf of the organization. And so you'll want to do the same thing I suggested to the other person earlier about getting a statement or a letter from the organization acknowledging that the payments that you made were necessary and reasonable business expenses that you incurred on behalf of the organization. Okay, so you get that in writing. That's your documentation for your tax deduction. And I should add that all of this, anything that you're putting in writing on behalf of the organization should be on the organization's stationery. It doesn't have to be formal printed stationery, as long as you have the organization's name and address at the top of the contribution, the letter, then that's good enough. Okay, let's see. I'm looking at Azania's, sorry, the banquet convention space, the donation is a single board meeting. Still, they're not collecting rent. It's just free use of space. So there's no tax deduction that they can claim for that. I hope this information was helpful. Now, if you have a question, please leave it in the comments. And if you'd like to get more tips, be sure to subscribe to our channel. At Whitfield & Associates, we're here to help you get organized, get in compliance, and get control of your finances. So be sure to visit our website at churchcpa.com. Thank you and have a blessed day.